and gentlemen, you're listening to another edition of DIY Money.
DIY Money.
Oh,
Wow.
was that a crack? I'm glad, Daniel.
Wow, it's about time.
It's good. It's good. Welcome to the club.
All right, my hair might migrate off the head now, too, huh?
Ooh, ouch.
We missed you last week.
Hey, I was glad to be missed, but Logan did an amazing job.
Logan was fun.
Amazing job. We'll bring him out more, for sure. He has done an exceptional
There's
job.
room on the couch. They can't see that on the
there's room
podcast,
on the
but there's
couch,
room on the
yeah.
couch.
Odds and ends, give the Instagram, Twitter update, because this is some big breaking news.
Yeah, we broke it last episode.
Oh. Okay.
There's that.
Whatever.
But if people skip that episode for any reason, you can now find us at DIY Money Podcast.
DIY Money Podcast.
Wait, on everything.
Instagram,
actually.
Twitter.
Yeah.
Those are the follow on Facebook. So we've unified the following tag. DIY Money Podcast.
Yeah, so now you don't have to do dots and underscores and
Why
slashes.
did we do that? Why didn't we do that from the very beginning?
Because we're idiots.
That was not good.
Listen, we're great at DIYing your finances, but when it comes to
social
and marketing,
all the other stuff, we're getting there.
not our strong point.
All right, I am so pumped about today.
Okay.
I'm so excited about today because this is an idea that has come to us from the very listener who's going to be kicking this off.
Okay.
It's a young man. He came into the podcast or knowledge of the podcast through his father, who listens to the podcast regularly. And I absolutely love this. This young man was in our kitchen one day, and he said, Mr. Quint, why don't you launch a DIY Money Junior? Now, we've had a junior question before.
Yep.
So it was not out of the ordinary that we've had these come in. We didn't take them. We haven't taken junior questions because we weren't quite sure about the whole, legal aspects and the, signing off on it and so forth.
Mm-hmm.
The one we took from the young lady over a year ago knew the family. They said, hey, we give you the permission to use this question, so on and so forth. But anyways, checked with legal, got it all squared away. So today we have our very first DIY Money Junior question. So, for those of you listening out there, if you have a young person in your home and you think, hey, this is great, what an unbelievable opportunity for them to learn about finance, stock market, etc. And also, if you want to send a question or have them send a question in, do it. And here's the kicker. I love this. They're going to get a $25 gift card to buy stock. Not Amazon. Sorry, parents. I know you wanted that back to school money. But what's the company?
Stockpile.
Stockpile.com is a great company. Not endorsed, but
Nope.
now we're using them, so we should be endorsed. We are going to give a $25 gift card to open a stock account to buy their first stock. I love this. Makes you nervous, doesn't it?
Slightly.
All right. Without further ado, let's go to our first DIY Money Junior question from Charlie. Charlie, what do you got?
Hey, Quint and Daniel. My name is Charlie, and I'm 12 years old. My dad and I listen to your podcast together, and I had a question for you. I've started earning a little money from mowing a couple of yards so far, and I've just been putting my money into a regular saving account. I hear you talk about investing in stocks and mutual funds on your show, and I would like to know what those things are and why they'd be good for me to invest in. Thank you.
That warms my heart.
Good.
I mean, I'm kind of getting teary-eyed.
I see the
I love
goosebumps.
this. Ah, gosh. Okay. I have so many thoughts on this, and we're 4 minutes in, so I basically have not a lot of time.
Yeah, but take it away.
No. Okay. Well, I will. First of all, Charlie, love the question. Thanks for that. You're going to get a $25 gift card to buy your first stock. So it's going to be important to know what the heck that is.
Mm-hmm.
Backstory, I was 12 years old when I got my first stock. It was given to me. It was McDonald's stock, and this was at a time, I've talked about this before, where McDonald's wasn't on every corner. We had one in our little town, and it was a big deal when you went to McDonald's.
Mm-hmm.
So, getting stock, I learned very early on, I was an owner. A small owner, but an owner.
Yeah.
And that allowed me to participate in the company's success and or failure. In addition, I kind of took it to the next level, which I don't necessarily advise. I don't want my kids to do this. But when I would go to McDonald's, I would actually ask for the manager, and I would tell him I was an owner, and I kind of felt like he worked for me. I kind of had that air. I'm not advising this, but I did ask him how the business was. I told him that my fries stunk that day, the toys sucked, whatever it was. I mean, I got into it, and obviously my parents learned very quickly that this was something I was passionate about. Here's the deal, Charlie. The sooner you learn this, the better. And unfortunately, this is so diluted in what's happening today. Diluted just means watered down. We've got to make sure we keep this at a level for these young people. Investing in stock is actually buying into a business. Literally investing in a company where their employees get up every single day to try to make you money. It is not, understand this, it is not about buying it at one price and someday later, next week, next month, next year, selling it for a higher price to the next person in line. That's not what we're talking about. What we're talking about is investing in and alongside the businesses that even you, Charlie, use every day. Companies like Apple. Do you play on an Xbox? That's by Microsoft. Maybe you play a Switch. That's Nintendo. All of those companies are public, and you can buy their stock. Now, we don't have enough time. We're going to do this, but we don't have enough time to talk about how a company becomes public, why they go public, how shares are bought and sold. But I think for today's question, the importance is, A, do I think you can do better with your lawn mowing money than putting it in a savings account? Yes, I do. B, understand that what you're buying and investing in, the companies that you use and you favor. You stick to that, Charlie, you are going to do exceptionally well. Bravo to you, young man. Invest, learn about it, study it, keep listening to DIY Money. To Daniel from the CFP.
Yeah, absolutely. So when you invest in a company, you are literally becoming an owner of that company. Generally speaking, companies are able to raise their prices over time. People pay X amount for the profit that a company makes. So as they raise their prices, their profits tend to go up over time. People pay about the same amount for those profits, which means the value of the dollar that you've invested in that company goes up over time.
Stop.
Yep.
He's 12.
I know. That was a really hard thing to try to
Can we bring this back a little bit?
That's a PE ratio right there is what we're trying to get at.
Here's the deal, Charlie. Make sure the multiple of the stock you're buying is well within the No.
Yeah, but that's why you're buying stock is because over time, the value of it, over the long run, public companies, especially once you get them in, he mentioned a mutual fund, I believe, a mutual fund or an ETF. Those are vehicles or investments that own multiples of stock. I'm trying to use
I know this is going to be a struggle for
words
you.
that I can explain to my kid.
It's okay.
Not very easy. This is why my 5-year-old asks 50 questions because I'm always like, hyperbole and multiple. And he's like, what does that mean? He's still adding. Anyhow, so yeah, you want to buy stocks because you get to be owners in great companies. Those companies, I mean, you look at the McDonald's of the world, the Apples of the world, Starbucks, things like that, and they've lasted a long time. And so you can really benefit from the earnings and growth in those over time. Now, from a financial planning perspective, Charlie, what I would look at, hey, you have income. I would file a tax return no matter what that income is, and then invest in a Roth IRA. Talk to your parents about that because you can start socking away money for your retirement. I know you're a preteen. You're not thinking about retirement. But listen, 60-year-old you will love 12-year-old you if you sock away 20% of your lawn mowing money into a Roth IRA this year.
That's a good one for mom and dad. And I think this will be a nice addition because certainly the parents will probably listen to this with the kids. I know for my young man, 14, who now has a job, who ironically has an opportunity to invest in a 401k at his job. That's unheard of at that age. It's amazing. Local Chick-fil-A, they're doing an amazing thing there. But what I'm also doing with him is I am going to encourage him, keyword mandate, that he actually take some of his money and invest in a Roth because now he has earned income. I will probably be giving him some additional money because he can invest up to the amount that he has made.
Yep.
So I will probably be donating some additional money to him for that Roth through a gift and allow him to invest. But a great long-term planning tool for the minute your son or daughter starts to make any sort of earned income and can file a tax return. That's huge. I think that what's important, and again, we're going to learn as we sort of dial this in, is, Charlie, the last thing I'll leave you with is imagine identifying the greatest hot dog stand you've ever been to. You go visit this hot dog stand, and ultimately the line is around the block. It's the best hot dog stand in the world. As you get up to buy your hot dog, the gentleman says to you, hey, in addition to a hot dog, you actually can buy into this business because we're going to expand. I need some more money, not just from what I'm selling these hot dogs, but I need some investors to actually invest in this business because I'm going to look to put one in the next town and maybe even nationwide. You love the hot dogs so much that you decide to give this entrepreneur some of your hard-earned money so that he can help to expand his enterprise, not help. He can go ahead and expand his enterprise, his hot dog stand in different areas. It's really simple. If that hot dog stand is successful in other areas, the value of your investment will be increasing because the value of his business is increasing. Now, what I actually just described to you, and for mom and dad's sake, is actually a term called private equity. We don't need to go down that road. But ironically, what most people don't understand is the products and the services that we use every day, we can invest in those companies, and as they continue to sell those products, as they continue to raise their prices, as they continue to add profit back into their business, the value of the business grows, and that's why your investment grows. Get out of your head the idea that I'm going to buy it today and tomorrow I'm going to flip it to some, other trader. That's not what we want to do. Charlie, you're on the right path. Thanks for sending in your question. We're going to send you a $25 gift card to, what is it called again?
Stockpile.
Gosh, Stockpile.
Pile of stocks.
Got it. And you'll be able to start down the investment road. I'm very excited to track your progress because I know you, and you'll let me know how you're doing.
We didn't even talk about dividends.
Oh,
but
boy.
We're out of time.
We're out of time. All right, friends, remember, the secret to success, very simple. Live on less than you make, invest the rest, do so for a very long time. Make it a great one.